Hello, everyone. Welcome to the stock-specific class here for Thursday, December the 9th. I'm going to try to have this slide up whenever I start the class, just so that if there are new people that are joining and they don't know how to get a hold of me during the week, if they have questions, you can email me at jerry@traderspro.com. So jot that down, and like I said, if you have questions during the week. I usually only sit down to answer emails once a day. Usually it's in the evenings, just because the trading day is so crazy and hectic that I have to devote the time to and the focus to the market at the time for decisions I have to make. So just be aware of that, if you're sending out a question and you're looking for an immediate response, it could be probably in the evening I get to it. But if you have any questions, go ahead and send those to that email address there. All right, let's get started with class. Now, the market has rebounded quite a bit from the last time we had class. Last week we're leaning a little bit more towards the bearish side, expecting the market to kind of pull back a little bit, which it did. But we had a nice little bullish reversal that actually started last Thursday and is kind of carried through. We'll take a look at those charts here in just a second. But as far as just quickly going through the direction alerts, and we talked a little bit about this on Tuesday as well. Those of you that were in the market update class on Tuesday, we kind of showed some of this. But since that Tuesday class, we've seen a pretty good shift in the direction alerts. Momentum is gone out of that hold range and it's moving into buy, so it's moving in the right direction. It's indicating that this rally seems to have some legs and it could definitely continue. Breadth has picked up as well. It was over here in the left side of the trending box. It's almost moving into the high end. And so there's good participation so far. There's a lot of stocks that have been participating in the rally, not just a handful. And we talked about this a couple of weeks ago when the market was rallying, but there was only, it was only like Apple and Microsoft that were rallying the market. I mean, there's only a handful of stocks that were really keeping the market up, and that's always a danger sign. It's just an indication that the rally is a little bit of an illusion. Under the surface, there's a lot more bearishness to what's going on, and again, hopefully through all this, what I'm teaching you is if you're brand new to trading, you come into trading just looking at the daily financial section of your nightly news, where they tell you that the Dow was up or the S&P was up or down, and you're basing your trading or your investment decisions off of that type of stuff. Hopefully this has been eye-opening to you, that there's so much more to analyze and there's so much more to be aware of. And if you've been trading and investing that way and you've been losing tons of money, these classes are going to help you tremendously. It's not going to be the magic solution that where everything, you're going to be right all the time, or you can know exactly what the market's going to do. You can't. But there are clues that the market leaves you that can tell you, hey, it's more likely the market rallies, it's more likely the market goes down. And that's what I'm attempting to teach you in these classes. And there's a lot of repetition in these classes. I get it. I have to be that way because I've got new people joining all the time, and everyone's at different stages in their learning process. And so if I start rattling off something that you've heard 20 times before, go make yourself a sandwich or something and take a little bit of a break from the update. But it's kind of necessary to make sure that I can help everybody, everybody that's joining this process. And even then, it's sometimes we need that repetition. I learned all this stuff through a lot of repetition, going over it again and again and again. And sometimes you go over it and you think you understand it, and then something happens and it has a deeper meaning. You're like, oh man, this is something I've been I've learned 100 times before, but now I truly understand what's going on and how important this is and how it can affect my trading. So don't be afraid of repetition. But breadth there's been more participation with the breadth indicator moving in that direction. Sentiment has still remained high, although it's getting closer into that extreme range again, just because it never really dropped much. The confidence in the rally, or the confidence in the market not dropping very much, has been very high. Now again, that can be a opposite indicator. You know, if the market gets too confident, if the professional traders get too overconfident, that can be a contrarian indicator that maybe things could start to sell off. But typically what you look for is that confidence with the market getting into those extreme overbought conditions. That's when you have to start to take profits off the table, build more of a cash position. But so far everything's looking like this market could continue to rally for a little while. Moving on to some of the other ones as well, the buy-sell ratios. I talked about this on Tuesday. The market should rally higher. We should start to see those sells come down, those buys go up. And that's what we're seeing. You're seeing we are at this kind of extreme wide range here. And now we're starting to see it move in the other direction. Now sentiment is starting to pick up, not quite yet at that red line yet that would indicate that it's extreme, but it's moved sharply over the last few trading days, so it's moving there rather quickly. Under the index tab right here, this is something I'll show you from time to time, is to keep an eye on the buy-sell ratios of the different indexes. Almost all these were negative, and by negative mean below 1, meaning that there were more sells than buys. And that was just about a week ago that I went over this, and we were seeing that. Now we're starting to see a little bit, it's starting to turn more positive, where, on the, here's the Russell 1000 right here. There's 1.5 buys for every 1 sell. Here's a 2-to-1 on the S&P 500 index, 2 buys for every 1 sell. Now that's showing that again, this is picking up, that there's a lot of stocks that are starting to move up and thus going from hold to buy. And that's a good sign of breadth. That's a good sign of participation, is when you start to see these indicators, these ratios start to pick up. Now, how do I know when that starts to get extreme? Well, if they start to get into the double digits or close to double digits, if you're getting into 10-to-1, 10 buys for every 1 sell, 15 buys for every 1 sell, that starts to get a little bit extreme. Although some of these smaller indexes can get extreme rather quickly. Dow Utilities is already at 9-to-1, but there's only about 14 stocks in that index. And utility stocks tend to be a very defensive stock, meaning when the market starts selling off, one of the phases that professionals traders do is they start going into safer sectors, and one of those is utilities, and it makes sense. What are your utility stocks? They're your gas and electric. Anyone that has a mortgage, or in some cases, even if you're renting and you're paying for your utilities, right? You're paying that gas bill and that electric bill every month, no matter what. I mean, it's one of those things everyone pays it. And it's not that although prices do go up and down, gas prices can go up and down. We're seeing natural gas kind of go up a little bit lately, but you're not going to see this drastic growth. It's not like these companies are going to double in value over the next little while, right? The reason why people invest in utility companies is for the dividend. That it's just the stock doesn't go anywhere, but you get that dividend check from all those people that are paying their utility bills. So that's a very defensive sector. These big institutional traders will pour into those stocks, not because they're going to make a ton of money, but because they can make some money. They can maybe capture that dividend, which usually these companies usually have pretty high dividend payments. So this is exactly what you would see at a bottom and starting to move back up again, is that utility stocks are kind of leading the way. Now we're going to get to a point here where is the market breaking out again? These big institutional traders are going to say, why am I having my money in this gas company, this natural gas company, when Tesla's taking off again or Microsoft's taking off again, and so they'll start coming out of utilities and pouring into some of these other stocks. So what you'll start to see is, as these ratios start going up, you'll probably see the utilities ratios start going down. That would typically be the cycle there that you would normally see. But again, this is an area you can check on. I don't check on this every day. This is maybe something I'll check once a week just to see if there's any trends there that I'm seeing in those ratios of the different indexes. Let's look at the individual stocks real quick. And on Tuesday, we were just breaking out. I was just turning a little bit more bullish on the market because we were just breaking out of this range. I talked about how, with the choppiness of the S&P Thursday, Friday, and Monday, it looked like there was still that possibility that it could move lower. That you had that impulsive move down, and then we were kind of moving up, but kind of in a choppy way. There's risk of moving lower there, but then we had that big move up on Tuesday. That put us up close to the breakout area. Since then, we've been just kind of pausing right here, which is natural. Okay, we had a pretty big monster move. I mean, if you throw out the Friday drop right here, since Thursday, the last time we had this class, we had that bullish inside day. And then since then, we've had a pretty big move higher. We're almost at new all-time highs. So having this close to new all-time highs, we're very likely to break out and go higher. The question, though, is when, and moving that far in that few amount of days, it's not uncommon to kind of pause a little bit. And this could even continue another day or two, maybe even pull back a little bit. So I wouldn't get too concerned about that. I'm not too concerned with if the market pulls back a little bit right through here. In fact, it could even pull back to this previous low right in here, and that would give you a bullish inverse or upside down head and shoulders pattern, and then end up breaking through. So in the very near term, it's hard to tell what the market will, because it could just break out right here and go higher. I mean, there's nothing that says it can't do that. It could move sideways right into here. It could pull back a little bit, but overall, at least as from what we're seeing right now, we should break out and go higher. So all of you that have been waiting for Santa Claus, or more specifically, the Santa Claus rally, which one of these days, if I feel like going on a rant, I'll really unload on how ridiculous the Santa Claus rally is. You hear it every year, and if you really analyze it, it's one of the most ridiculous things. And really use common sense, it's one of the most ridiculous trading factors out there. But if that's what you've been waiting for all year and dreaming about, it's showing, the chart is showing that could very well happen. Now there could be a little bit of disruption over the next few days or so, but ultimately we should break out and move higher and get that rally. So now after that, as we get into the new year, that could be a whole different story, but we'll see how things look until then, until we get to that point. One thing I keep coming back to, though, is coming back to those direction alerts real quick. One thing I've said for months now, as the market has gotten close to some of these extreme ranges. When we know we're getting ready for a really big correction, and when you're really going to see me start saying, hey, a big one is about to happen. We gotta be prepared for that. Go to cash, get out of long positions. You start to move towards the right side of these extreme reversal risk ranges. Not just enter into them, but get to the far right side of these ranges on the momentum, on breadth, and on sentiment. We start to get to that extreme. What that's telling you is it's telling you the trading crowd under sentiment believes that the trend is going to continue forever, that it's safe to get in. There's no way you're going to lose money. And remember what I always say, when it feels safe to get in, it usually isn't. If you feel like you're absolutely confident there's no way you're going to lose money on something because of everything you're hearing from everybody out there, I'm telling you right now, that's the worst time to get in. That means it's not safe to get in. You're probably getting in right near the top and you're about to get clobbered. When the market breadth, every stock is participating and every stock is at their extremes, and they seem almost every sector seems like it's going up and could go up forever. And then you get the market momentum where the drive into these trades is at its extreme. I mean, it's the perfect storm. And this doesn't happen very often, but usually it happens ahead of these larger corrections. It happened ahead of the big COVID collapse that happened in March of 2020. You know, if you got beat up in that drop and said, boy, that came out of nowhere. No, there were warning signs ahead of that. In fact, I was predicting it a week before it happened. I was saying, I don't know when it's going to happen specifically, but the warning signs are flashing that the market's about ready to get clobbered. And the benefit of that is we were able to get to the sidelines, get to cash, and when the chaos happened, if you knew how to trade it, made money on the way down. We were able to do that, and then as it started to bottom out, those signs started to show up as well, and we were well positioned to make money on the way back up. So again, we've been waiting for it to push into that extreme. So far, what's happened is that these pullbacks that we've had just haven't been, these pullbacks have happened where we didn't quite get to those extremes. You know, summer I was talking about getting there, and we might get there, and then we had this pullback in September, alleviated that overbought condition. We've rallied up in October, and this pullback kind of alleviated that condition. Is this breakout going to be the one that pushes us to that extreme range where, and what I'm talking about here is instead of these smaller pullbacks, let's look at a longer term chart here, instead of these little smaller pullbacks, you end up getting one of these deeper pullbacks. Maybe not as deep as what happened in 2020, just because it couldn't be that deep. I mean, it's not like we set any records for how deep the pullback was in 2020. It was how fast it happened. I mean, when in the country's history has the government shut everything down for a month, or nobody's doing anything, or very few companies are even operating? That just caused that dramatic collapse. But it could be something much deeper, double what we've seen in these previous months. We could get one of those deeper, and should get one of those deeper pullbacks. We're due for it. This has been a pretty incredible run right here, and that's been fueled by no interest rates, very low interest rates to no interest rates, Fed pumping money, stimulus checks. I mean, it's been fueled by money being pumped into the system, and now we've got to pay the price for that at some point, and that reckoning is going to be coming. It always does. It's just you always hope it's going to be a soft landing when it happens and it'll be manageable, but it never works out that way. It's always ends up being a crash, so to speak. It's just human nature, so you just expect it. But again, we're not there yet, but I'm just kind of preparing you for things that I'm looking out in the future for, and some of the signals I'll be looking for, and why it's important to learn these things in these classes to learn how to recognize them yourself. So SPY looks like it could break out. Dow is not too far from its breakout area. The Dow had even a stronger rally off the lows there from Thursday. It moved straight up. It could pull back a little bit and probably should after a move like that. You're not likely to go all the way back up to the breakout area in one move. Although it could kind of look that way, kind of similar to this move right here, where you had several days where you're moving up, a couple days where you pull back and then moving up again. Here was 3 days where it pulled back and moved up. I could see something similar happening here. The bottom line is, don't get too concerned with any pullbacks. Don't panic if you have a pullback day here or two. It's just likely the market retracing or consolidating a little bit. Now that could morph into something bigger. There are some signs that could indicate that a pullback could be bigger, but especially if it is caused by news that comes out that the market isn't expecting. I don't think any COVID news right now is going to freak the market out. It seems to have managed that COVID variant news pretty well, and I don't think it's too, unless there's another variant that comes out that is serious or is more serious, or where we don't think we have the vaccine cover it or anything like that. That's always possible, but I don't anticipate any major bombshells coming out that would be unexpected for the market or too big for the market to digest. NASDAQ 100 is very close to breaking out. Now, I'm still a little bit concerned about a possible head and shoulders pattern. I was looking at this, and it could be that it's already happened. There was your neckline. It broke through the neckline. It retested the neckline. It dropped further here, and then now it's rallying back up. But the fact that we're right back here at the left and right shoulders, typically your head and shoulders pattern will tend to terminate the same area there. We're right at the same area. I'd feel a lot more comfortable if the NASDAQ 100 can get just above that area. We're not just barely above it. We're not. Again, what concerns me a little bit is that we pulled right back to it yesterday, and then we're coming down a little bit. So I'd like to see a rebound where we get above this range. That would give me a lot more confidence that we're on our way to breaking out. I don't think this is a big deal, but it is something I'm keeping an eye on. I wouldn't want that to get any deeper. We do need those NASDAQ 100 stocks to be the leadership stocks that kind of push the market higher. And the Russell, again, had a big drop. I'm not expecting necessarily for new all-time highs on this index, maybe to see it work its way back up to the previous breakout area right in through here. This has been lagging almost all year. It's been lagging, but you would want to see it participate in the rally, because that would show the market breadth if it could do that. It is down a little bit today, very down along with the NASDAQ 100. And remember that's a reflection of kind of the risk-on type trade. Is when you see the Russell 2000 outperforming other indexes and the NASDAQ 100 moving up strongly, it tells you those institutional traders have a risk appetite, that they're buying riskier stocks that have potential to grow a lot faster and move a lot quicker. Today would be kind of a risk-off day, at least that's what I would interpret. It could be just temporary, though. We'll see how that kind of plays out. All right. And you can look at the bond market. Bond market's come way down since we were looking at on Tuesday. It was starting to move lower again. It's come down quite a bit. That could be something that could fuel the market going higher as well. So now let's take a look at some individual stocks. That's the purpose of the class today. Again, the reason why we go through that update is to recognize the conditions we're in. Are the conditions there to want to add stocks to the portfolio, or do we want to go to cash, look to get out of position, or tighten up stops? We did add a lot on Tuesday. Maybe I'll add one more today, but we are starting to get a little bit low on cash to add. But I do think this is an area here where I think we can rally for a little while. So I would want to be adding more cash or adding more positions if possible. But we'll take a look at the watch list here and see if I want to add anything. But let's look at some individual stocks here under computer and technology. Now, some of these we already have in the watch list, so I'm going to go down the list a little bit. Still try to stay in that 90 strength rank as much as possible. But remember, if you have a big pullback in the market, there's going to be a lot of stocks that the strength rank moves down a little bit, and you would expect it to, but they could still be really good trends. And so you're going to find a lot of really nice gems even down around that 90 strength rank area. And you're still dealing with the top 10% of stocks out there within these sectors. And, you get these stocks that have had nice pullbacks and look like they could charge forward again. Man, you've got good entry points in a lot of those positions. But I'm going to move down to this TRNS right here, Transcat Incorporated, 93 strength rank. And we can turn the signals on here so we can take a look at this. But again, I like the nice big run up right here. And then it's retraced, it's pulled back, kind of that ABC pullback here. And now it looks like it's starting to move back up. You're just kind of waiting for it to go back to a buy signal. Now, whenever, you heard me talk about ABC patterns as part of that stair-step process. Stocks will have an impulsive move up, and then they'll pull back in kind of a three-stage move. You'll get the initial sell-off. A lot of times that seems like the buying opportunity. The dip buyers immediately they've been waiting to get in. That's their chance to get in. That tends to be the wrong time to get in because that's just the first pullback. Wave B is called a sucker's rally because that's usually when those first dip buyers start piling in. They're not strong enough to push the stock higher yet, and so you get this flush out move where it drops. You eliminate a lot of those first dip buyers that weren't really that committed, and then you get that deeper pullback, wave C, and then usually the institutional traders, the smarter traders, recognize that that's the time to get in, and they start buying, and that's what kind of continues that trend. So that's kind of the stair-step process that we talk about, and those steps tend to form that ABC move. However, whenever you see a stock that looks like that's moved up and looks like it's had that ABC move, you'll hear me many times call it a possible ABC pattern or potential ABC pattern, okay? And that's because, again, we can't know exactly what the market's going to do or exactly what a stock is going to do. I won't know for sure that is an ABC pattern. I won't know for sure until the stock is broken out to a new high. As soon as it breaks out to a new high, I can look back and say, yep, that was an ABC pattern. So if I'm going to enter a trade down here, I'm operating under the assumption that it's a possible ABC pattern. It's behaving like an ABC pattern. But as you trade this, I'm warning you right now, there's going to be many cases where it looks like it's an ABC pattern. You're expecting it to move, the trend to continue and move up and break out, and it rolls over and goes lower again, and it's not. It's stair-stepping down. You're probably in a downtrend. That's why you still need to manage your trades. That's why you'll see me put stops below that previous low a lot of times. Because that's where I know I'm probably wrong, and it's not an ABC pattern. Sometimes you have what looks like an ABC pattern, but it's actually part of a larger correction. In other words, you have this big run up right here. This is not a big pullback right here. this does look like an ABC move right here, but it's still possible that maybe that was just wave A. This is a sucker's rally right here for wave B, and you get a wave C coming down in here, and then it takes off again. The pattern could still work, okay? The behavior could still work. It's just that you're early. You were part of that. What you thought was the end of the correction was just still right in that middle part of it. It still had that flush out move to go, and then it had the bigger move higher. Now, the good news is if you manage your trades properly, maybe you buy in right here and it rolls over and you get stopped out as it moves to a lower low right here. But if you didn't lose a ton of money right here, then when it does come down here a little bit deeper and then starts to move back up again, you get in, put your stop down below here. You could get back in again, and then that time you might be right. You get to capture this big tight move again, or have that potential to capture that big move again. So I just want to warn you that as we go through these, and I say, well, I like this because it looks like this is an ABC pattern. Looks like it go back up. Again, it doesn't guarantee that it'll do that, but so far it's behaving like uptrends. Uptrends behave that way. You have that ABC pullback, they move higher. Sometimes the pullback is more choppy, just kind of choppy like this, and then it goes higher. You're alternating between impulsive and corrective moves. So we'll see how but that was one I definitely want to keep an eye on. And you're waiting for it to go back to the buy signal anyway as confirmation. And even if it does go back to the buy signal, I point this out all the time with the stocks in our watch list that it doesn't mean I have to go buy it. It means it's giving me the signal to buy it, and I can reevaluate it. Do I have enough cash in the portfolio, or have I used up most of my cash? I don't want to add anything right now. Okay, I might skip it. Or maybe there's a stock in my portfolio that's lagging, it's not doing anything, and this one looks like it's taken off. Well, I might sell the one that's a dog right now and then jump into this one that looks like it's moving, So there's different trade management decisions you can make. It doesn't mean we have to buy it when it goes back to that buy signal, but that's why we throw these in the watch list so that we can kind of keep an eye on it. All right, under sectors and computer and technology, again, under the hold section, I also was liking this BW. Wait, did I grab the right one here? Computer and technology. Here it is, BW. 92 strength rank. Kind of similar again. It had this big run up right here, this pullback. Now, another thing that I'm looking at too, by the way, I've got trainings on all the stuff that I go over. If you go onto the YouTube channel and you can look for some of these topics, but I talk about Fibonacci retracements and to simplify it, the main concept of the retracement is that stocks will tend to retrace about 50% of their moves. Keywords tend to retrace, and about 50%. It can be a little bit more than 50%, a little bit less than 50%. But when these stocks are stair-stepping, when they pull back, they tend to pull back about half of the previous move. And so when a stock gets down around half of the previous move, I start to pay attention. Well, here's a move up. This is about maybe a little bit less than 50%, but about 50% of that move up. It has a little bit of a choppy back and forth move to this on the way down, and it's starting to move up right here. This is something I want to pay attention to. That could be the pullback. Notice how another thing I could look at is where did it pull back to? Here's a breakout area right here. Resistance right here. It broke out above that. Now so it used to be the ceiling up here. It's now become the floor. It pulls back and now it's the floor. We'll see if it rebounds off of that and starts taking off again. Again, we'll put this in the watch list. And if you're not familiar with how to add it to the watch list, I'll probably add most of these to the watch list after class just because it takes a little bit extra time. But if you're brand new, you could add, what we want to do is we want to add this to our watch list, and then we want to put on a signal, alert signal that's going to send us an email when this goes from hold to buy. because that's when we're looking for it to go to a buy signal as a confirmation to get in. This will send an email alert to tell me when that happens, so I don't have to watch it all day long or whatever. If you click on this little green plus button right up here, you put your mouse on it, it'll say add to watch list. So if you're wondering which one to use, this is if you want to add it to your portfolio, meaning you want to buy it. We're going to add it to the watch list. So you click on this little green plus sign right here. We need to set up a watch list. I have a training on how to set up your different watch lists as well. If you go to that YouTube channel, I want to add it to the stock specific class watch list, and then hit save and go to watch list. It's going to take me to the watch list here. And I'm going through this a little bit quickly, but remember, this is recorded. You can go back and review it if you have to pause it, rewind it, and review it. And here's what I just added right here. And this little box right here, and if you go to the top of the alerts, it'll tell you that it's the alert box. You just check it, and then another box is going to pop up to say add email alert for BW when the signal changes from hold to buy, and then just click save right there, and it'll save it, and it'll let you know when that goes from hold to buy. All right, let's add another one from Computer and Technology. This DAVA right down here, DAVA. Now, again, notice how I'm down a little bit on the strength rank, but I'm still in that highest percentile, 91 percentile there. And again, this looks like a pretty distinct ABC. Had this move up, look like A, B, C, pulled back. Again, notice that initial sell-off. This is a sucker's rally right here. The flush out move right here, moved higher. There's the initial sell-off. Looked like a buying opportunity right here. There was a sucker's rally, so that was wave A. This looks like wave B. And then there's your flush out move right here with a nice little bullish reversal candle right there. Since then, it's kind of come up along with the rest of the market. A little bit of a pause day today, but it's come up pretty nicely. Now, again, this is a possible ABC pattern. I won't know for sure if that's a bullish ABC pattern until it breaks. As soon as it breaks out to a new high, I can say, yep, that's what that was. That was a bullish ABC pattern. So I'm operating under the assumption that that's what this is. If it is, it should continue to move higher. Not in a straight line. It could kind of pause a little bit along the way. Notice during this move right here, you had this run up and this little pause and this run up. What that is it's what we call fractals. You know, you can have the larger stair steps, and within those larger stair steps, you can have these smaller stair steps, and they're all kind of alternating between impulsive and corrective moves. So here's the larger stair step right here. And then within that, you can see, well, here's a move up, here's a smaller little correction, here's a move up, a little smaller little correction, here's a move up, and then down. Here's a larger move up right here. You have a move up, here's a step, a smaller step, move up, smaller step. We call these fractals. It moves in a fractal type approach or system. All right, so this is one that I want to keep an eye on. If it goes back to that buy signal, it could start to take off. Let's add that to the watch list here real quick. Put the alert on it. Oops. There we go. All right. Under the retail sector, I already have a few of these in the, I'm going to look at Dillard's here. Oh yeah, that has a big drop. I don't want to look at Dillard's. Let's go to down the list here to this MOV, Movaldo Group, 93 strength rank. Again, had this big run up right here. Notice how on the pullback it's more choppy. It's more back and forth. It's right at about a 50% retracement of that move up. Let's see if it can start to go back to a buy signal there. I'll add this into the watch list later, right? Want to kind of keep moving along here. Let's go to business services. Here's Avis right here. CAR is the ticker symbol, 98 strength rank. Excuse me. Had a big sharp move right here. That was some sort of announcement. Might have been an earning announcement or something like that. Since then, it's kind of drifted in more of a corrective, a bit more of an ABC here. Let's see if this can start to take off again. Maybe as some of the travel sector starts taking off. Boy, this is something, I tell you, just as a side note, you want to hear me vent. Man, I missed the pre-COVID. I mean, there are so many rental cars out there that you could get really good deals with rental cars. You know, and you could get a deal of $25 a day or $30 a day. And there are tons of cars you could choose from. There's, you know, and now, man, you're paying like $100 a day, $75 a day. We need the rental car business to pick up so they can buy more cars and get those rental prices down, because it's crazy. It is not fun. But anyway, this looks like it could start taking off again. Has a nice little pullback through here. And again, doesn't mean we have to trade it, but we'll keep an eye on it. And we'll put it in the watch list. Let's go back down to business services here and then look at this HMHC, 97 strength rank. And you can see why I like it. Here's a long consolidation through here, didn't do anything, and then it broke out, and then it looks like it's pulled back in an ABC pattern right here, possible ABC pattern. Notice how it pulled back to kind of what used to be the ceiling now has become the floor. Hopefully that holds. If it does hold, this thing should move up to new highs. You just need to wait for it to go back to that buy signal. So we'll throw that one in the watch list. This is what I love about a market pullback, and why, you know, when I went to cash in the portfolio, I only had one stock in there for a couple weeks or whatever. I know there are some of you who are like, man, what am I doing? Why are we doing this? You know, and it was hard to have a class because I didn't want to get into anything. There was nothing I wanted to get into yet. Hopefully what you learned through that process was patience. I mean, we wanted to be in cash because the market was selling off. We don't want to lose all that money on the pullback. What we want to do is we want to have money ready for this. Now everything's pulled back and the market's starting to go back up, and we've got tons of stocks to go over in class. In fact, we're not going to be able to get into all of these. We don't have enough cash to get into all these. That's a good problem to have. And that's why that's the benefit of going to cash. And most people don't do it. They hope the market goes up forever and they never have to get out, and all they're going to do is make money. But you have to manage it. When the market conditions look like they're deteriorating, get to cash. Then when it sells off and it looks like it's starting to move back up again, it's like Christmas shopping. It's you know, there's so many bargains and so many deals, and you just don't have enough money to buy everything you want on Black Friday, right? But the good news is you'll make enough with your stocks going up. The next Black Friday, you'll have more money to buy all those cheap products on sale. All right, business services. Let's go one more on this one. MRAM, 95 strength rank. Again, you should, as soon as this pulled up, you should know why I liked it. I want you to see this ABC pattern every time you pull up a chart. Well, when it's there, I want you to be able to recognize it immediately. Here's the impulsive move up, wave A, wave B, wave C. Starting to move up again, wait for it to go back to a buy signal. Now, this is pretty far of a move up. You could wait for a breakout as additional confirmation to see if it can break out. This is probably pretty close to getting to a buy signal. Yeah, any move higher will get it to a buy signal. It's very close. But because it might give you a buy signal right at this breakout area, again, maybe you wait an extra day just to see if it can break out. This is that additional confirmation. It's up to you. It just depends on how much confirmation you're looking for and what you like. But let's add that one. And let's do two more under autos. Now, we did already add Ford up here at 91 strength rank. We added Ford. I like this little consolidation through here, but this is one I want to wait for the breakout here. And you can see why. We ran up to here, and look what we did. We're pulling back down here. I don't know how long it's going to stay in that sideways range. I'd rather just wait till it breaks out before I commit capital to it. Could be pretty soon, though. But let's add some new ones here. And I've been waiting to add this one back in. The strength rank is down to 87, but Tesla, we've made some money on our portfolio with Tesla. You know, a lot of people, you might have missed this run up in Tesla right here. Since then, it's gone into a correction. Looks like wave A, wave B, wave C had a nice little bullish hammer right here. Although we're down a decent amount today, you know, maybe that's not done yet. Maybe you have a deeper pullback here. But I want to, and I know it has a sell signal, but I want to get this on the watch list because Tesla is one of those stocks that has a cult following, and when it starts to look strong, it starts to take off. And a lot of this selling, if you haven't been paying attention, is a lot of it's due to Elon Musk himself. He has to raise capital to pay this tax bill he has, this massive tax bill. And so he's been selling thousands of shares of Tesla to pay for that, and that's what's put the pressure on the stock. So and I'm not trying to generalize this as one person causing this, but he's a big reason why the stocks pull back. Well, you know, he's not selling to exit. He's not getting out of Tesla there's a reason why he's selling. There's a lot of buyers that still believe in the company. He could be back to buying back into it again, especially at these lower prices. Because again, you know, once he's paid that tax bill, you know, he could be, you know, buying back the stock again. The bottom line is this should start to move back up again at some point. And I want to be ready when it starts looking that way, because this can get on these crazy runs where it just takes off and goes. And the one regret I have in the portfolio is back here, it made a big run up right here, and the market was looking a little bit weak. We had a bearish reversal day right here, and I went in, and we had nice profits, and I went in and took the profits, and I missed that whole move right there. And I'd like another chance at this. Not quite ready yet, but you know, that's a nice correction that could set up for another big move if it starts to take off again. It's had some of these bigger corrections in the past that have led to. So here, look at this one right here. It had a big consolidation through here, and then that led to that run up. Had a decent consolidation right here, led to it. So these consolidations usually lead to these big pops. So we might be sitting on this for a little while on the watch list, but I do want to get it in there, so we're watching it each week, keeping an eye on it, getting ready to pounce. And then one last one we could add in that same auto, tires, and truck sector is Goodyear Tire, 90 strength rank. Have this little sharp pullback right here, starting to move back up. There was a bearish reversal day to there, and this is kind of a bullish reversal day, so it's kind of a battle going on right here, but we're waiting for this to go back to a buy signal anyway, but we'll add that into the portfolio. All right, real quickly here, let's go in the watch list for the stock specific class here and see if I want to add anything. ARC, this one did, where is it? This one did go to, here it is, did go to a buy signal today. I don't love this pattern just because it, you had the higher high right here. Now you have a lower high right there. This looks to me like it's rolling over, and that could change. This could break out and it could go, but I just don't. I think there's better looking patterns. In fact, I might just go ahead and just boot this out of the list just so I'm not. Because the only thing that can happen now is it goes and runs, and I wish I look back and say, boy, I should have got into that. So, but I just don't like the behavior over the last several months there. SD, these are some of those oil stocks that I still am kind of keeping an eye on to see if they start moving up. CDEV, CDR, this is a REIT. NOG is an oil stock. By the way, I mean, these have pulled back. It's not a bad spot for a long-term position. I would imagine that oil is going to start. It's had a big pullback. It should start moving back up again. And if you want early entry points into some of these, if you were looking for very low confirmation, you're pretty bullish on oil. These are spots where you could look to get in this area here. AMBA, this is one I really wanted to get into, but I jumped right up in here on the breakout. Who knows? I might still end up jumping into that. That thing could start taking off, but I personally, there's areas on the chart that I feel like I'm chasing, and sometimes I don't mind chasing, but most of the time I don't like to feel like I'm chasing after something. I don't like to usually try to predict a reversal where you're getting in almost too early. There's kind of a sweet spot. It's hard for me to kind of explain where that sweet spot is. It's kind of I've looked at so many charts over the years that I kind of know it when I see it. I can kind of describe it where if you have an ABC pattern, I don't necessarily want to predict the end of the ABC pattern where I'm trying to predict the bottom. I also don't like to wait too long where I feel like I'm getting in too late or when it's about to break out. It's kind of like right in this area here is kind of my sweet spot, that where you're getting a little bit of confirmation that's starting to move up, but you're not yet feel like you're chasing it. And right here was that spot, but it just jumped. It jumped that next day to an area where I feel like I'm chasing it, and I just missed it, which is fine. You have to have that bus stop mentality. Another opportunity is going to come around. None of these look real good right now. We got into most of the good ones last class. This one, it did go to a buy signal, but again, I'm kind of waiting for it to break out of that sideways range. Very similar to Ford, that when it's moved sideways for a while, sometimes you can get into it and it stays sideways for a few more weeks, and you just feel like you're wasting time in it. This one's getting close. Had a nice little pullback right here. It's been moving up. It's getting pretty close to that buy signal. There's Ford. this is the one I'm considering a little bit of an early entry. And ASPM tried to diversify a little bit the portfolio, and this will get me into the construction sector, which if you go back to the sectors right here, remember this is ranking the strongest sectors. Right now, utilities is the strongest sector, computer technologies next, and then there's construction. I don't like a lot of the individual construction stocks, but I did like this one, so I do want to get a little bit of exposure into the construction sector in case that sector continues to outperform. And the way I'm going to do that is, and we've traded this one before. We've made money with ASPN before. And so here's that breakout area. It seems to be rallying off that breakout area. It seems to be giving me a higher low. Hasn't yet gone to a buy signal yet. And it's still a little ways away from going to that. So this is a little bit of an aggressive entry, but what I'm going to make up for it in is a tighter stop, because I'm going to put my stop right below here. If it doesn't keep going up and it comes right back down, I'm not going to lose very much because the stop is pretty tight. And I'd probably want to be out of this at that point because it will have dropped below that breakout area as well. And so it's a little bit more of an aggressive entry, but I'm going to make up for it with the trade management. And again, I'm looking at the indexes. Don't forget that now. All that analysis we did in the beginning of class is not a waste of time. The indexes look like they should be breaking out and going higher. And if that's the case, a lot of stocks should be doing the same thing. A lot of stocks should be going higher. So if you have stocks that are already acting like uptrends and the market looks like it is acting like an uptrend and should go higher, those trades should work. You've got, well, you've done all you can do. You've got the probabilities working in your favor. That's all you can control. At this point, we can't control anything else. So the stop would be below this low, which is what I'm looking at too. Is I'm putting my mouse over this. This was the low day, and I want to see what was the intraday low. What was the low of that day? And it's going to show me right in here. Not yet, because I got to put my mouse over it, but that's what you'll be looking at right there. The low was $49.70. So we'll just say $49.50. And again, that's just any number I want to choose below that is fine. There's no really major reason why I chose $49.50. It's kind of a round number, right? I could have done $49.55 or $49.69 or $49.65 or $49 even. The point is I want to have a price that's below that low that will tell me I'm wrong and I need to get out. So don't think there was anything magical about, don't think you're wrong if you decide, no, Jerry, I'm going to use $49.65. Okay, do it. Please do it. Because that's what you're going to have confidence in. That's you always want to put your stop loss where you know you're probably wrong. And if it's some penny point different than mine, do it, because then that's what's going to cause you to go ahead and make sure you stop out. All right. So let's go now to add this to the portfolio. I'm going to click on this little blue button right here. And I'm going to make sure I put it in the stock specific class portfolio. And the stop price is going to be at $49.50. And then usually I just kind of play around with it here. I'll start with 100 shares, see what that looks like. And the two numbers I'm looking for is one, and I've lowered usually the transaction price, I want to make sure it's around $10,000. I want to have about $10,000 in each trade. I actually lowered that to about 7,000 just over this last batch that I'm getting into, just to allow me to get into more trades, to diversify a little bit. I want to get a greater magnitude of trades. And then the portfolio at risk, I want this to be between 1 to 1.5. But because I'm getting a lower transaction price, a lot of these have been even lower than a 1% portfolio risk, which is fine. It just means there's a smaller risk per trade. I'm losing less money if I'm wrong. But I can add a little bit more to this. Let's try 150 shares, 170 shares. Oh, that's too much. Wait, what was 160 at? Oh, yeah, that was too much too. I was looking at the wrong number. I was looking at the cash left here. So we're already at 150. So 140, 30. There we go. 125 shares would cost me about 7,000, and my portfolio at risk is right at 1%, which is good. What that means is that if I get stopped out, I should lose about $888. Now, an additional step to this is you better be okay with that amount, possibly losing that amount. If you're wrong, that's what you could lose. If that amount's too high, then you got to change the ratio. You got to get that percentage risk lower, which means you're probably either having a tighter stop, which I don't see how you can have much of a tighter stop, but you could also control it by buying fewer shares. So if you want to get that risk down, cut in half, then because that 888 is just too much, you could maybe handle 400 or 500. Then what you would do is you'd bump this down to 75 shares or something like that. There you go, 75 shares. Now you're only losing $500 if you get stopped out, and that's fine. But we're at 170. What were we at? I forgot where we at. 145. $125. I think that was it. All right. So let's purchase and go to my portfolio. And we're getting down to where we only have about 8,000, a little less than 8,000 left. So we have enough for one more trade somewhere. I'm not doing that today. And we can quickly check to see how I got to wrap things up here, but see how our portfolio is looking. LY still just hanging on. It's real close to its stop loss area, but we'll see if that picks up. LPX is breaking out again. That's good. It's moving higher. LPI. Now, LXP is getting into the extreme reversal risk, but it's not at the far right side of that extreme reversal risk. When it does that, sometimes I'll tighten up a stop, although I might not do that. Because the market could still run and this thing could stay overbought for a little while. So we'll see about that. LPX has been moving up okay. TGLS, that's looking good still. NVIDIA down a little bit today, but overall I still like that pattern there. Still looks okay. CAMT down a little bit today. Pattern still looks good. HBP is breaking out. Nice move there today. ACLS down a little bit today. I bought this one on the breakout, so it looks like it's kind of retesting that breakout a little bit here. We'll see it. Hopefully that holds and goes right back up again. RCMT, we jumped back in this one. Got out of this one. We had a nice run up right here. I got out on that day right there. It dropped, and then we got back in it again. It's breaking out again, so that one's been managed pretty well. boot. A little flat today, but overall it still looks like it's working. And then ASPN is one we just added. So things look good. Hopefully we can start seeing some better results and the portfolio start moving back up. All right, that's all I have. Have a great weekend. We'll see you on Tuesday for the market update. Bye now.